Okay, so now we're moving on to part three, which is my macro outlook. So, as I've sort of already mentioned, you've got to look at sort of what's going on economically with what's going on geopolitically at the moment. And, those geopolitical issues are increasing. Hamas attacking Israel, it's just a potential powder keg in that region. And that could easily escalate. Now, Israel is going into Gaza in a big way. The risk is then that other nations get drawn into that conflict as well. And as I mentioned, Hezbollah already fired rockets into Israel. It's just, there's a lot of tension in that region. Just when you think everything's settling down quite nice as well. Okay, so markets reacted to that towards the end of the week. Commodities rallied quite aggressively. Oil sort of up $5, sort of 87s. Finished really strong on Friday. Gold up $62. I think it was about 1944. And silver was well up as well. So even Bitcoin, Bitcoin was up 290 points, so it's around about $27,000 at the moment. And of course, the dollar rallied too. When we look at the stock market, we've already seen some earnings coming out. Stocks did manage to finish the week higher, but again, it's more certain sectors that's holding everything up. And then, of course, when we look at the data, we saw US inflation come in slightly higher than expected. Well, probably except for me, because I did warn in my daily newsletter that I did expect it to come in a little bit higher. And that's just really just based on the simple fact that, energy prices are higher again, and that feeds into the system. Okay, so what else is there? So I suppose when we look at those FOMC minutes, they do continue to confirm this higher for longer policy on rates. And, all of this geopolitical tension that there is that's pushing these commodity prices higher. And that obviously that includes energy, but it's both oil and gas. And that has the potential to keep inflation higher rather than seeing it on its way down more. And of course, that could impact food eventually as well if this really escalates. Then in the EU, manufacturing does seem to be improving slightly. Although, with Germany and France struggling, it just for me, it just doesn't bode well for the rest of the Eurozone, really. And even in the UK, data was okay, but when you look at that GDP, it's sort of starting to indicate stagnation. And of course, now we've got these sort of Europe gas supplies are very high. Temperatures, last winter were very mild. Although I must say, it seems as though, with temperatures starting to drop now, that we're probably going to see an increase in demand. I think that a cold winter is fine. The storage conditions will cater for that. Of course, the concern is if it's a severe winter, whether there will be enough. And gas prices have been going up because of a situation with a Finnish pipeline out for about 5 months anyway. And of course, those gas and petrol prices could still push Europe into a recession just because it has that extra impact and pushes inflation back up. We still haven't really got control over inflation, I don't think. Now, these geopolitical conflicts, as I mentioned, for me, they could start to impact food prices as well. Again, that you get sort of all these supply issues starting to come through, and if we start to see inflation turn and move higher again because of all this, is there a chance that the central banks will hike again? I suppose Putin would probably be happy from the point of view that the focus has gone away from him. Just over the last week or so, obviously with what's going on with Hamas going into Israel, and that's probably sort of helping him a little bit. The big question is, when you look at all these geopolitical situations, will it sort of encourage or even trigger other countries to decide it's a good time for them to become aggressive against another nation? And that is a major concern at the moment, I would say. And just a reminder that we have more corporate earnings reports coming out over the next couple of weeks. And then in the US, of course, those auto workers are still on strike. This is the 5th week now. Now, when you look, you think, wow, those wage demands are really high. But if over sort of the last, I don't know how long, but they've actually their wages have declined probably about 15%. I don't know if that's in real terms rather than actual wage cuts. I'm not sure there. But the interesting fact here is that when you look at those 3 auto companies where these strikes are going on, if you look at the CEO's pay over the last 13 years, so since 2010, between them, they have collected more than $1 billion in compensation. Okay, so now the UK's approved Microsoft's $69 billion takeover of Activision Blizzard. That purchase should now go forward very quickly. Oil fundamentally could be considered bearish, yet these wars that are going on could override that sentiment. There is plenty of supply at the moment, but there could be a disruption to that supply going forward. So it's something you've really got to sort of keep an eye on and balance if you're looking at trading oil or oil stocks, of course. And that threat, of course, is that OPEC Plus continue to keep supply tight by extending those cuts into 2024. So it's a very complicated picture. Just when we think everything is getting more straightforward, inflation dropping, etc., here we go, geopolitically, more wars coming forward, and there doesn't seem as though there's likely to be a quick solution to them. So just be careful. Just don't just think of the macro outlook. Don't just think of the economic situation. Think of the political situation as well, and just bear that in mind. And of course, keep really tight and up with the news. If you're trading on a daily basis, intraday, or you're very sort of sensitive to any of this type of news that's coming out, then reach out to us, because we use a Squawk, which is an audio service, so we hear all of this data as it breaks, so we can make those instant decisions. And if it's something that you're interested in, please reach out and let us know. So we offer newsletters, we offer workshops, 1-week courses, our comprehensive masterclass that's really going to help you. Apart from gaining all that fundamental knowledge, you get to spend 20 trading sessions with me, practical sessions. So that's I'm not saying I'm going to turn you into a massive trader in 20 sessions, but getting that sort of feedback from me, that insight from me, is valuable. Now, other things that we offer are trader mentoring. We consult to companies on FX and commodity exposure. Of course, we provide a massive educational content to individuals, exchanges and brokers. If you feel underfunded, why not give the trading challenge a go, and see if you can get that funded account. Maybe you're underfunded, maybe you don't want to risk your capital, which is quite understandable. And of course, one of our courses now includes a free attempt at the trading challenge. If you would like to find out more about anything, then contact us at info@symaxfintech.com or directly to me at chris.tubby@symax-int.com. Okay, so now we're going to go into the technical analysis section. So I hope you join us for part 4.